Good morning. Welcome to the Heritage Foundation and our Lewis Lehrman Auditorium. We, of course, welcome those who join us on all of these occasions on our heritage.org website. I would ask everyone here in-house if you'll be so kind to see that cell phones have been turned off or silenced as we prepare to begin. And, of course, our internet viewers are always welcome to send questions or comments at any time, simply emailing speaker@heritage.org. We will, of course, post the program on our Heritage homepage following today's presentation for your future reference as well. Hosting our discussion is Walter Lohman, Director of our Asian Studies Center. Mr. Lohman also serves as an adjunct professor at Georgetown University, where he leads a graduate seminar on American foreign policy interests in Southeast Asia. Prior to joining us at Heritage, he worked at the U.S. ASEAN Business Council, serving both as Vice President and Executive Director, and had previously served the Council as Senior Country Director representing American interests in Indonesia as well as Singapore. He has served on the Republican Senate staff for the Foreign Relations Committee, as well as an aide to current Senator John McCain. Please join me in welcoming my colleague, Walter Lohman. Walter?
Thanks, John. Thank you. Yeah, I got to say, the McCain credential is so old, it does make you think he must be former, but he's actually still kicking. He's running for election again, so. No, the credential is old. The credential is old. Actually, he's not young either. But, welcome you all. It's often said of speakers that they require no introduction. But today, I think it's the topic of our panel that requires no introduction. The direction of the Chinese economy, whether it's in for a soft landing or a hard landing, is very much on the minds of anyone who follows either developments in the Asia-Pacific or American foreign policy or global economy or business issues. It's a very hot topic, and in fact, there's new numbers out this week on the Chinese economy that I think will be subject of today's discussion, among many other things. So I'm not going to belabor the importance of the matter at hand today. Besides, we have several expert panelists, terrific panelists, really, to help us through it. And I'm proud to say that they all do more than just play economists on television. They are real economists. First, James Dorn. Dr. Dorn is Vice President for Monetary Studies, editor of the Cato Journal, Senior Fellow and Director of Cato's Annual Monetary Conference. He's also an expert on economic reform in China. Cato is really a brothers in arms with Heritage on quite a few issues, and I'm a big fan myself of Cato, at least on the econ side. On the foreign policy side, I have a few differences, but on the econ side, we're lockstep on many things. I also can't help but note that my wife and I are both graduates of UVA, where you got your PhD, and we aspire to the same for our children, but that's a whole other issue. We're very glad to have you here. Thank you. And Peter Bataille will then speak. Peter is Senior Adjunct Professor of China Studies at SAIS. He's a Senior Advisor on China to the Conference Board and a visiting scholar at the Carnegie Endowment. Peter held various positions at World Bank before coming to SAIS, including Senior Advisor to the Vice President for East Asia and Chief of the Resident Mission in Beijing. Thank you for being here, Peter. And then Bill Wilson. Bill Wilson is Heritage's resident expert on Asia economy, including China. He's been here for about a year and done quite a bit of work on regional economic issues from Japan and Taiwan to India, and yes, also China. He, in fact, has a particular expertise there, having lived in Beijing for some years. Bill is also a former chief economist for Ernst & Young, and he worked in the banking sector for 7 years, so that gives him a particularly useful perspective, I think, on today's proceedings. So with that, let me turn it over to Dr. Dorn, and he'll get us started, and we'll just go through the panel and have some time for Q&A and discussion at the end. Thank you.
Okay, thank you. I think everybody can hear me okay. I'm just going to make my presentation from here. I would like to thank Walter Lohman and Heritage for their work in advancing the rule of law and freedom in China and around the world. Their index of economic freedom has been extremely valuable, in my opinion. So congratulations on that work. I myself have been working in China since 1988, and I taught at Fudan University and I've published a number of books over there, and I write a monthly column for Caixin, which is one of China's leading financial magazines. So I've kept my mind and heart pretty close to what's going on in China for quite a while. And I've learned a lot from it myself. Initially, after I graduated from the University of Virginia, one of my fields was comparative economic systems, and I specialized in the Soviet Union. But when that collapsed, I had to look for something else to do. Now, the question before us today, can China avoid an economic crisis, hard or soft landing? I was thinking about that, and it really presumes almost like the economy is like a machine, an airplane that can be fine-tuned by experts and can be brought down safely or crashed. But the economy is not really a machine. It's a complex system of millions of human beings making exchanges daily subject to institutional and cultural constraints. And I think that's the way to look at the problem. So the hard or soft landing question diverts attention, in my opinion, from a more important one, namely the scope of government and the relationship between the individual and the state. And that's going to be the focus of my remarks today. China's economic imbalances are well known. Inefficient state-owned enterprises and state-owned banks, or as I call them, SOBs, asset bubbles, excess capacity, financial repression. We know about that a little bit in the United States as well, with repressed interest rates, negative real interest rates. But China has much more widespread financial repressions, specifically because its financial institutions are all mostly state-owned. So this is a legacy of central planning that's remained. Most of China's prices are set by the market, but the interest rate and exchange rates are still controlled by the state. And this creates a lot of distortions in the economy. But what motivates this imbalance, or these imbalances, is a more fundamental imbalance between the market and the state, or more precisely between the individual and the state. The Chinese Communist Party has maintained its monopoly on power through all the economic liberalization process since 1978. Certainly, China is not what it was under Mao, but the party is still extremely powerful, and individual rights are not respected in many cases. And the paradigm that the party looks at, basically, is that stability comes out of power, not freedom. And that turns sort of the philosophy of the United States and liberal economies upside down, where power was looked upon as dangerous by the framers of the Constitution, and the function of the government is to protect and safeguard private property rights and individuals against the power or the tyranny of the state. The Chinese Communist Party, therefore, has it totally backwards from the viewpoint of liberalism. So China has a top-down, not a bottom-up political system, and it's ironic, actually, that the economic reforms have mostly been bottom-up or spontaneous. They started at a very local level, sometimes without any law backing at all. For example, the initial agricultural reforms and so on. And then, as they were successful, the party leaders decided to imitate those reforms elsewhere. So like good politicians everywhere, they took credit for what somebody else was doing. But they recognized, even Deng Xiaoping said, the township and village enterprises emerged spontaneously, and they didn't foresee the development that would take place and the spin-offs from that. So in China, the tension is between economic and political regimes. There's been huge improvements in the standard of living over time, as we all know, but there's still a large inequality of power. And there's a tension, therefore, between the individual and the state due to uncertainty of the law and of basic human rights. And that's why a lot of wealthy people are very unsure of what the future of China will be. They're leaving, they're taking their capital out of China because of this uncertainty. Just like people flee Maryland, where I live, because of the high state taxes. They go down to Florida. So as long as there's an exit option, people will leave. Now, there's not a great exit option because they don't have open capital markets, but people find ways of getting around this. If they had more capital freedom, then capital would stay in China and more capital would be attracted to China. So there's uncertainty of the rule of law, there's uncertainty of property and contract, certainly great uncertainty with respect to freedom of speech and other human rights. So I would argue that China's future will depend on resolving this tension in favor of freedom and the individual while constraining state power to the protection of persons and property. Xi Jinping has announced economic reforms, but in fact, the reform movement is going fairly slow, and there's still political repression. In fact, some authorities have argued that the repression has increased under Xi Jinping. Document number 9, which was brought out in 2013, is supposed to instruct the party on basically precluding any discussion about liberal or Western values, about the rule of law and free markets and so on. And for any of those of you that are familiar with Chinese universities and the academic situation over there, they have little freedom of speech. There's still, people still debate things on economics, but on terms of rule of law, constitutional issues, you're taking a big risk if you do that. And the head of each university is not the president of the university, it's a party member that's in the university in the propaganda department, basically. Not a good thing for freedom of speech and ideas. So, of course, China still sees itself as officially socialist. And even though it's moved along the path of market liberalism, their philosophy and the underlying ideology is still socialist. Criticism is necessary for a robust economy and also for a robust civil society. You need a free market for ideas, as Ronald Coase and Ning Wang argued in their recent book. And as Zhang Wei-ying has argued, a famous reformer in China who just wrote a book for Cato called The Logic of the Market. And he's got an article in the lead article in the last Cato journal, which I edit, on the role of ideas in leadership in China and how important those two factors are for economic development. And Hu Shuli, the editor of Caixin, who also used to edit another periodical called Caijing, and Caijing was she was basically fired from that job, and they had a rule of law column in that magazine which was ended. So Hu Shuli went over and started a new publication. She's a very brave woman. Innovation, which is critical to entrepreneurial discovery and to a dynamic market system, depends on freedom of thought and the right to own property of all sorts. Now, Xi Jinping, and one of the goals of the third plenum was to create what they called, quote, a knowledge economy. Well, how in the world can you have a knowledge economy without a free market and ideas and criticism? So suppression of criticism leads to suppression of basic human rights and limits a range of choices open to individuals, which is really the key criterion of economic development. Increasing the role of options that people have, choices that people have. Peter Bauer pointed that out, but it goes all the way back to Adam Smith. So what's more important than just economic growth is the range of options open to people. And options mean exchanges. So the greater the extent and scope of the market, the greater the range of options people will have. But if you have capital markets directed by the state, you have land which can't be privately owned, you have a hukou system that basically restricts labor mobility, you don't have basic individual rights to assemble and freedom of speech, that's going to affect the range of choices open to people. So the real problem in China, in my opinion, is not slower growth, it's a lack of individual rights that make life worth living. Economic growth is obviously important, and the Chinese people have greatly benefited from the economic growth that they've achieved. But they did that mainly by increasing economic freedom, by liberalizing the economy, and limiting state intervention in the market. For example, you can see Nick Lardy's new book, Markets Over Mao, to show how important the role of markets have been in increasing the living standard. But much remains to be done. China needs to end financial repression, and that's a legacy of central planning. So China, even though they don't have a formal 5-year plan, they call it a program now, they still have a lot of planning and investment, and I think other people on the panel are going to be talking about this. They need to have liberalized interest rates and open capital markets to make enterprises more efficient. And as I said, land reform, the hukou system, which is basically an internal passport system. And the real issue, again, is political institutional reform that's needed. And I'm not talking about democracy as the primary aspect here. I'm talking about limiting the power of the government. And democracy is important. People should be allowed to elect their own leaders, but those leaders have to be constrained by a constitution of liberty, as Hayek called it. So the first issue should be to limit the power of government and expand the range of individual choice and freedom. In conclusion, a friend of mine, Liu Juning, who's a Chinese liberal and reformer, said in a book that Ted Carpenter I did some time ago on China's future, he said the following, I quote him: "Whether China will be a constructive partner or an emerging threat will depend to a very great extent on the fate of liberalism in China. A liberal China will be a constructive partner. A nationalistic and authoritarian China will be an emerging threat." So I think we can agree on that foreign policy for sure. Rebalancing China's economy means, therefore, getting the prices right, which means securing property rights and embracing Hong Kong's mantra of, quote, small government, big market. I think that's a great mantra, and I hope Hong Kong can continue in that direction. They're still number one on the economic freedom indexes for both Heritage and Cato. Most of all, to be successful in the future, China needs a free market in ideas, if it is to have a soft landing. So that's my major argument here. Thank you very much.
Okay. Thank you. Peter.
Thank you. I got to know China in the early and mid-90s when I served as head of the World Bank's office in Beijing. So my perspective is slightly different from most people who come from a political science background. I come from an economics, financial background. Whilst I agree with Jim that ultimately the question of China's success or failure will not be determined in the economic arena, but in the political arena, I agree with that fundamental thought. I think it is worth focusing on the economic dimensions of what's going on there. We've been consistently wrong for the last 35 years in looking at China. We've always underestimated what these people are going to do and were capable of. And I'm concerned that we may be making the same mistakes today. But that is after I acknowledge the basic point. So I will be focusing more narrowly on economic questions, and I believe that my neighbor here will talk more specifically on financial issues. Looking at China, it's interesting to note that its per capita income on a purchasing power basis at the end of 2003, the last year for which we have some complete national accounts, only 22% of that of the US. That's about the level where Japan was in the mid-50s. Japan had decades of high growth thereafter. That's observation number one. I believe that if the leadership does the right things on the economic side in the next 18 to 20 months, and the current circumstances are indeed very challenging, that the prospects for medium-term growth remain very good for China. Why? Number one, this Japan example. Number two, the room for catch-up growth, that is inheriting or copying technology from the rest of the world, remains very significant in many sectors. Number three, China finances most of its own investment. It's a net capital exporter, unlike almost all other developing countries. China helps finance the rest of the world, including the United States. There's no shortage of savings in China to finance its own development. Number four, entrepreneurial dynamism is becoming a very important factor in China. If you look at the statistics of company registrations just in the last 12 months, it's amazing what has happened. Especially individual companies, entrepreneurs, have increased registration by some 12 million companies in the last 12 months. And that, I mean, even if you assume that 80% will fail, you create a base for long-term development that is very significant. Because ultimately growth will have to come from innovation and private entrepreneurship. There's so much the state can do, but it cannot be the ultimate engine for growth. I agree with Jim on that also. The next reason why I'm stressing more positive factors is that innovation, whilst constrained by lack of freedom of expression, is moving ahead in China. You see in enterprise after enterprise, including some state enterprises, mind you, that the productivity is actually at the firm level increasing quite rapidly, and that they are adopting modern technologies at a rate like few other countries. An example is that China became the largest importer of industrial robots last year, and is expected to be to have the largest reservoir of industrial robots of any country, including the US or Canada, in a few years' time. I was just reading yesterday a report on the aluminum industry in China, which is suffering from a tremendous excess capacity, like many other industries. But it's very interesting to note that the efficiency of aluminum production is almost twice as high on average as in the rest of the world. So don't complain. Complain about the lack of freedoms, but don't equate that with the lack of innovation. There's a lot of innovation and technological breakthroughs going on. Another reason why I sort of inclined to stress the medium-term perspectives, hopeful perspectives, is that they becoming less dependent on exports. They were heavily dependent on exports in the preceding several decades, but that export dependency is declining for several reasons. The exchange rate is much higher now than it was a few years ago, so exporting your way out of problems become increasingly difficult. But also the service sector as a component of China's economy has become quite important. In 2013, for the first time, services began to exceed manufacturing as a contributor to GDP. And that's significant because if you want to maintain full employment, it's much easier to have a large service sector because the amount of capital per job in the service sector is lower than in manufacturing. Also, the skill levels required in service sector are higher than in manufacturing. So the fact that finally services are beginning to take off as an economic force in China's economy is very significant. Then I would like to mention that many countries, many developing countries, emerging economies are suffering from a tremendous deficit of infrastructure. India is an example. Brazil is an example. China is not suffering from a deficit of infrastructure, if anything, the opposite. And it has very large domestic construction companies and heavy equipment manufacturing industries that can make all the stuff they will continue to need in the future. There are very few other developing countries that are so well equipped in terms of construction capability and heavy equipment manufacturing capability. And finally, one point is also overlooked. China has still today, in spite of all the problems, a very competent civil service. If you want to grow, you have to have a capable government. I think China has a capable government. I agree with all these complaints about lack of freedom, but let's not underestimate positive factors. Yet there are significant doubts. Most of the doubts that we have about China's ability to avoid a deep depression and a hard landing are based on the very high levels of corporate debt, very high levels of local government debt, significant excess capacity in the commodity markets, commodity housing markets, that's the commercial part of the real estate markets in urban China. And there is always a risk that you'll get a sharp downturn. That would create a lot of problems. And of course, they also face the continued global economic problems. The US is beginning to do reasonably well, but Europe is still in the doldrums, Japan is still in the doldrums, and that will not help China, of course. In addition to all the problems I mentioned, you have significant excess capacity in manufacturing also, not only in real estate, but also in manufacturing. And you're beginning to see what I interpret as potentially dangerous nationalist attitudes and feelings in the way the regulatory agencies are supervising the companies, particularly foreign companies. Almost all the foreign business associations complain now about discriminatory regulatory enforcement. That's dangerous because that will kill the investment climate. And even though China has enough money to invest its own, to finance its own investments, it, I think, could benefit enormously from continued foreign participation in this drive. So many foreign analysts fear on the economic side, regardless of politics, and hard landing, because we don't know exactly how the debt problems and the excess capacity problems will be solved. On top of that, you have this very intensive anti-corruption drive by Mr. Xi Jinping and his people in the party, which have created an atmosphere of fear, which makes it easier for civil servants to hide behind not taking any decisions. So there are significant problems and headwinds at the present time. But we should not forget that China remains the fastest growing large economy in the world. We always complain about the slowdown, but there's no economy growing faster than China, even at 7%. And that China is still the largest contributor to global growth, more than the US and Europe together, at 7%. So these are factors that have to be taken into account. Other factors which lead me to think that perhaps they may be able to climb out of the current difficulties are, number one, that the party, with all its problems, seems to have reconciled itself with what they call the new normal. The party is not panicking at the slowdown. The party is doing the right things at the moment. Well, on the economic side, which is very encouraging because only a few years ago, in response to the Lehman's collapse, they launched this massive stimulus program, which was largely credit financed, which caused a lot of the problems we have today on the economic side. But today, the party seems to be comfortable with the lower growth, and that's economically very important. Now, the excess debt problem, my neighbor will speak more about it, is a serious problem, and I don't want to dismiss it at all. But I think the problem, the most serious part of that problem is on the corporate side, not on the local government side. And on top of that, it's important to remember the central government remains relatively, the debt of the central government remains relatively modest. So there is still fiscal capacity for bailouts should they be necessary. The biggest problem is corporate debt. It is way too high. And it became way too high, partly because of the emergence of the shadow banking as one of the factors that emerged as a result of the way China financed its stimulus program. That's serious. But the single most important danger I see is a collapse in real estate markets, because there is excess supply, as I mentioned, particularly at the higher end of the markets in the big cities, in the tier 1 cities. And I don't know what lies ahead. It's very hard. I will make some comments on the real estate markets before I conclude. So other negative factors that we should bear in mind is that the investment climate is deteriorating, that consumer and producer confidence seems to be falling. But in spite of that, household consumption continues to grow quite rapidly. We complain about China's low consumption GDP ratio, forgetting that the consumption growth ratio in China is higher than almost anywhere else in the world. So it's a bit of a paradox. Let me focus, just to conclude, on a few aspects of the real estate market, because I think that's where the shoe could begin to pinch. If you have significant excess supply in the commercial housing markets in urban China, you have significant excess demand in the social part of the housing market, which is something the government began to launch and promote very seriously after as part of its stimulus program. So you have two housing markets. One is commercial, where you have excess supply and stable or declining prices, and you have about 1/3 or 1/4 of the total is social housing, which is government subsidized for migrants and poor people, poor families, where you have almost by definition excess demand. Now, I don't know what's going to happen, because it's the housing market is so big, almost nobody can put their arms around it. I mean, China's urban population, let's not forget it, urban population is well over double the US total population. It's about 740 million people today. On top of that, the housing market conditions vary significantly between tier 1 cities like Beijing, Shanghai, Tianjin, Guangzhou, and secondary and tertiary cities, where actually most urbanites in China live. And the market conditions vary enormously. And on top of that, you have differences within cities. It makes a lot of difference whether you have an apartment that's in the 2nd ring road in Beijing or outside the 6th ring road. They're very different. So don't necessarily believe those who claim to have a fix on what lies ahead for China's housing market. This is an enormously large and complex market. Almost nobody has an overview. And I believe that one of the ways in which the Chinese government could prevent a collapse in the commodity markets is by devoting more budget money that would be devoted to the social housing markets to buy empty apartment blocks in the commodity housing markets and convert those apartments for social housing purposes. Then, if the market doesn't take care of these severe excess supply and excess demand problems, this is one way in which the government could intervene, because they have significant budgetary resources, $40–50 billion a year for social housing. So they don't have to sit and wait for collapse to happen. I think they can do things to prevent a collapse. There are still significant problems in the financial sector. There is still financial repression, as Jim emphasized, although it's on its way out, in my opinion. Financial repression 5 or 10 years ago was a much more serious issue than it is today. The shadow banking problem is almost 40% of total financial intermediation, is essentially a free market intermediation, no government control of interest rates. And those interest rates that are still controlled by government controls are gradually being relaxed. So I think financial repression, though it's still there, is on its way out. 5 years from now, the financial sector will not have a serious financial repression anymore. But the fact that you still have it today is an element of distortion, not only in the financial markets, but also in the asset markets, in the property markets. That makes it so complicated to put your arms around it. And then finally, to conclude, if I may, if you look at China over the last 35 years, they've had very difficult situations repeatedly in the 80s, in the 90s, and again after the most recent financial crisis. They have always come out on top, even though many foreign analysts always predicted to collapse. If you look at the track record over the last 35 years, there is reason to believe they may climb out of the hole once again on the economic side. I don't know about the politics. And that there will be no hard landing in the property markets, no hard landing in the economy, but a period of very difficult, slower growth in the next 18 to 24 months. But if they don't make stupid mistakes on the economic side, on the economic front, the medium-term growth potential remains excellent. And the chances they will be able to mobilize that potential purely on economic grounds remains pretty strong, in my opinion. So let me leave it at that.
Great, thank you for that. You raise many questions, and maybe we'll get to those when we start the discussion. Bill?
Thanks, Walter. Economics is often called the dismal science, and I must admit that I have quite a short presentation today, but must admit it's quite bleak. I read it yesterday to a Chinese friend of mine, and he cried. So hard landing or soft landing? I think it's an easy question. One word. One word. Are you listening? It's not plastics, by the way. One word. Debt. Debt. And I will focus on debt for the next 5-10 minutes. There's no doubt that Beijing has had remarkable growth over the last 35 years, but it's been built on essentially just two pillars. Net exports. As recently as 2000, Chinese share of global exports were 2%. Now they're 12%. I think they've hit a ceiling. There's no way they're going to. That one pillar is broken in terms of the export pillar. And by the way, its current account surplus has shrunk from 10% in 2008. Today, it's 2%. It's an enormous contraction. So, economists are lousy at picking turning points. I admit that. I'm a member of the Wall Street Journal forecasting panel. I don't take it seriously. I do it because it's fun, and I might get lucky and win, and get my picture in the paper. But economists are lousy at picking turning points. So I don't know when this will happen. The hard landing will happen. But I can say with a fair degree of mathematical certainty, once you delve into the numbers and find ones you think are accurate, it's a fait accompli. Why? There's been an enormous buildup in leverage debt in China, and the soaring debt and the massive. Just the 3 years I was there. I lived in Beijing from the summer of 2009 to the summer of 2012. And even over that short period, I noticed an enormous increase in income inequality. So these two things, this enormous increase in debt, and it's comprehensive. It's across the entire economy, with the possible exception of households who still have a high savings rate. But I think these things have put enormous pressure on the authorities to abandon its current economic model. I'm not sure that it will, but the pressure is there to modify the model. If you look at the economies that had a sharp rise in private debt, China leads the pack easily. There's no close second. With the rise of 70% percentage points in the ratio of corporate and household debt to GDP over a 7-year period, 2007, 2014. That's not a level. I mean, the increase in household debt and corporate debt as a share of GDP over such a short period of time. If you add financial sector debt, the rise in gross private indebtedness is 110 percentage points. Again, rise, not level. With government debt included, it's 124 percentage points, rise in 7 years. At 25% of GDP, China has one of the, as Peter mentioned, has one of the highest levels of corporate debt in the world. It's bigger than the U.S. It was non-existent in 2000. Had you told me 5 years ago that China would have a larger stock of corporate debt than the U.S., I would have laughed you out of the room. I didn't think it was possible. We didn't say much about local debt. I think China is often cited as having in terms of the central government, a low level of debt relative to GDP. That won't last long. Local government debt has amounted to 30% of GDP at last count. Last count was mid-13. A new audit currently underway by Beijing is expected to show a substantial increase from this figure. According to a new report by McKinsey, China's debt has quadrupled from just 7 trillion to 28 trillion as of mid-2004, reaching 280% of GDP. And that's higher than the level than the U.S. The difference is the U.S. is a rich country. China's not. The total wealth, if the aggregate wealth in China is $25 trillion. Again, that's a lot more than it was 5 years ago. But the total wealth in the U.S. is triple that, $75 trillion. In terms of the banking system, several more problems are troublesome. Half of all loans are linked directly or indirectly to the Chinese real estate market. Now, a lot has been said about Chinese real estate, but it is a problem. There are 70 million homes in the pipeline when there's already an excess supply. Now, if you're looking at ratios, you can't compare China and the U.S. They're very different. The Chinese can invest. Chinese essentially have two choices. Most Chinese have two choices to do with their savings, and the Chinese household does have a high savings rate. It's about 50% of disposable income, but they have two places to put it: in the banks or real estate. So think when you walk into an empty Chinese apartment, think of it as a piggy bank, which is why they're buying second, third, fourth homes. I lived in the Stanley Toon neighborhood of Beijing. I lived in an apartment complex with 24 floors. I lived on the 22nd floor, and I never waited more than 20 seconds for an elevator. You know why? Because only 6 people lived in the building. That's how empty it was. It got spooky at night. The building was so tired. Now, I think China actually has this statement may surprise you, or at least the first sentence. I think China has the capacity to handle a financial crisis. But this is one of the key points I want to take away today. One of 2 or 3 key points. It has the capacity to handle a financial crisis, but that's not the point. That's not the point. The question is whether China can manage this without a significant slowdown in growth. That's the question. I say no, they can't, which is why I'm predicting a hard landing. I don't know when the hard landing will be. It's up to the authorities. And by the way, the authorities still have a stimulus package. It's not nearly as big as it was in 2008, 2009. But these are still many stimulus packages coming out of Beijing. So first, because China's growth has been fueled by an excess reliance on credit, is just giant, unprecedented increase in credit over such a short time that we've never seen in history before. A protracted period of deleveraging would put credit growth below nominal GDP growth. An enormous deceleration in credit, like we saw in the U.S., is needed because many important industries, as Peter mentioned, are producing at less than 75% capacity. A huge number are operating at low capacity. And one of the indicators I watch is this. How do I know that the capacity is only 75% or 70%? Look at producer prices. It's a key variable. If you follow the Chinese economy, you look at producer prices. And that producer prices have been in deflation for 3 consecutive years. That tells you a lot. Now, deleveraging could easily lower gross investment shares of GDP from 50% to a more sustainable 30%. I forgot to mention that as a second pillar earlier in my speech. Of course, the second pillar has been fixed asset investment. Even during the miracle of the 4 Tiger countries, South Korea, Singapore, Taiwan, fixed asset investment never exceeded 35% of GDP. And it's not, and by the way, is it coming down? Is it falling? No. It's still at 50% of GDP. Which is why, and I disagree with my learned colleague next to me, Peter, the return on capital is not high. The return on invested capital has been dropping now for about 10 years. Another key factor, Chinese banks, and these are huge banks. ICBC is the largest bank in the world. I'm trying to get my money out, by the way. So it's not easy from here. Chinese banks have failed to recognize on their books how they misallocated investment and overstated GDP growth. Officially, non-performing loans are almost non-existent in the banking system in China. But and there's been no significant bankruptcies. Now, another key point for today. And this point may be a little bit complicated, but it's critical. Because Chinese banks have not correctly written down bad debt, past GDP growth must be overstated by an amount equal to all the bad loans that have not been written down. A fairly large number that may amount to as much as 20 to 30% of GDP. This transfer, when this debt is finally recognized by the authorities, this transfer, reallocation of income, debt doesn't disappear. You don't write off debt. Someone has to pay for it. Maybe the lender, maybe the banker, maybe the depositors, because they're getting lower interest rates on their deposit. But debt is fungible. You don't wipe it out. Someone has to pay for it. I won't talk too much about the private sector. You know, China's private sector is already highly indebted, and any collapse in investment demand and activity is also likely to have a significantly negative impact on profits. That would damage corporate solvency and lower investments still further. A sustained downturn would also hit the housing sector. The housing sector accounts for about 15% of GDP in China. Banks would suffer the fallout, where real estate accounts for approximately 30%. Think about this. Real estate accounts for 30% of loans in the commercial banking sector in China. In short, China has few options. And this is why. I think it's too late. Had they started reforming, recognizing bad debt 3 years ago, they could have engineered a soft landing. I believe the numbers show it's too late. In short, China has few good options. Any real reform that transferred wealth from the state to the household sector would probably trigger a severe financial panic and recession. No reform, which we're not seeing right now, we're not seeing any significant reform in China. The more things change, the more they remain the same. No reform, on the other hand, delays the inevitable, making the economy even more unbalanced. The longer they wait, the more imbalanced it becomes, and making the eventual pain become much more severe. Either way, either they pick what's behind curtain number 1 or behind curtain number 2. Either way, we're looking at a hard landing. And I hope this doesn't sound callous, but the best outcome is that it happens, the hard landing, is that it happens as quickly as possible. What about the Chinese consumer? Would the economy rebalance quickly enough over the short run to resuscitate demand? Again, as you know, I lived in China for 3 years. One of the best experiences is learning the character of the Chinese people, living on the ground. I can pretty much guarantee this, that with slowing growth, rising bankruptcies, and layoffs, the Chinese consumer is more likely to hunker down and not spend. I'm convinced. So what was the lesson from the Great Recession that most of the world went through? The lesson of the Great Recession was simply this: debt matters. Debt matters. Look what the developed world has gone through since 2008. I went back and looked. The U.S. economy has grown less than 3% for 9 consecutive years. I went back to the BEA, the Bureau of Economic Analysis website. I went back, way back to the 1930s, including the Great Depression. There's never been a period of time when the U.S. economy for 9 consecutive years grew less than 3%. That's a result of debt and deleveraging. I'll tell you what, I'll give you 2 other non-econ reasons why growth will slow, and I'll be done in a minute. The drop in fertility rates was a boon to the Chinese economy for about 30 years. You had a large working age population, a relatively small set of in terms of a cohort of elderly people, and a precipitous fall in the birth rate. China's workforce started to shrink in 2012, and that trend of a shrinking workforce will continue for decades. And slowing urbanization, according to the World Bank, less than 1/5 of Chinese people lived in urban areas in 1980. That figure now is more than half. So urbanization has a while to go, but urbanization won't be the engine that we've seen before. And I also disagree with my learned colleague about productivity. Total factor productivity is dropping in China, has been dropping. A recent study showed that it's been negative for the last 2-3 years. I'll finish by saying this is something we say in Heritage a lot. As you know, the Chinese yesterday announced they're building a second aircraft carrier. I think there is only one thing scarier than a fast-growing China, and that's one that is crashing. Okay. Thanks, Walter.
Yeah, that was terrific. And actually, just as promised, very dismal. I may start crying before the end of the program myself. Before I open it up to questions, and I may have a couple questions myself, I wanted to see if you two had anything to say as you listen to the other presentations.
Yeah, just a couple points. I think I agree with Bill on certain aspects, but when Peter did mention about the efficiency aspect, return on capital or return on investment, it has been going down for a long time for state-owned enterprises. But the return on capital, as Nick Lardy points out in his really excellent book, he's got a lot of statistical data in there, has been fairly strong and much higher in the private sector. So you just can't say that the overall efficiency is going down. I think you have to split it up, talk about the private sector and the state sector. And what Lardy shows, and a lot of other people have showed, is that the really powerful engine of Chinese development has been the private non-state sector. And that's the definition of that is somewhat ambiguous because it's how you classify different things, but that's another subject. But so I wanted to make that point. I'm sure Peter would agree with that. I think we didn't say much about monetary policy. That's one thing that I've been looking at substantially. the People's Bank of China is starting to ease. And they're going to be under, remember, the Bank of China has no independence whatsoever. The State Council really directs monetary policy. Now, the bank has a lot of very prominent and very good economists. They know what to do from an economic standpoint, but it's the politics that are going to drive this. And I was just reading, I guess today, some people have thought about the People's Bank of China maybe following suit with the Federal Reserve and the ECB and having a new stimulus program, quantitative easing in China. Maybe they could buy housing assets. I don't know. But that would certainly cause inflation in China. Why? It hasn't caused inflation in the United States because the Federal Reserve has two other policies besides the quantitative easing, which actually sterilized a lot of the new monetary base, namely paying interest on excess reserves, which has frozen the base at the Fed to a large extent. And second, the macroprudential policies, higher capital ratios and so forth for banks. That's starting to flow out a little bit now. C&I loans and so forth in the United States are starting to increase. M2 money growth starting to increase. So all that monetary base that's been created in the huge Fed balance sheet, if that escapes, gets into the real economy, that could lead to inflationary pressures. But that could happen in China much faster if China engages in another credit spree and significant easing and even quantitative easing, which I would not rule out completely. You could see inflation increasing in China, and inflation is one of the most dangerous things in China. So I think that is a risk. And remember, the state-owned banks, they just basically get orders. They still have capital allocations in China. They basically lend the money out. They don't have a problem lending money out. They can get people to take the money. So they can just lend it to state-owned enterprises. So that's a couple things I wanted to point out. I guess Peter is maybe a little bit more optimistic on how fast financial repression will get out of the way in China. China's been promising to liberalize their interest rates and opening capital markets for some time, and of course, they have gradually opened capital markets. They just started this Shenzhen, Hong Kong connection or link between the capital markets. China's stock market was one of the best performing, if not the best performing market last year. But shortly before that, it was one of the worst performing. So it's still a roller coaster ride and a casino. And for China to have a real, and I'll finish with this, for China to have a really global important capital market, remember the renminbi is not convertible on capital, on the capital account. It has to have a free flow of information. That's why Hong Kong is a place to go over there, because they have transparency, they have a rule of law, they have a good legal system, independent judiciary, and Hong Kong's going to be used as the place to do global transactions. China will not reach that pinnacle unless they allow freedom of information, and Xi Jinping seems to be cracking down on that. So that, again, is where the tension is, and I think that's the real issue.
Peter, did you?
I agree very strongly with Bill's last point, that the thing that we have to fear worse is China crashing. Whether that's worse than China growing fast, I don't know. But I also agree with the great importance of the debt situation. I've tried to also alert you to that issue in my remarks. The question is whether things are out of control or not. Bill seems to posit that it's too late now. The cards are clear. They're heading for a crash, and there's very little they can do or can be expected to do that will avoid that. I don't see it that way. I still see that the situation is manageable. I think that's the main comment I'd like to make.
Okay, thank you. Let me open it up to questions. Yeah, right here in front. Right down in front. Yes, right. Please identify yourself.
My name is Arnold Zeidlin. I've been teaching in China, in Guangzhou. I have two questions, actually. One for Mr. Botelier. You mentioned earlier in your talk that if the Chinese do the right thing in the next 18 to 20 months, you thought that you saw a good outcome. Could you explain what you mean by the right thing? And for Mr. Wilson, or anyone else on the panel, can we get a definition of hard landing and its consequences?
Good question. Bill, why don't you take the first shot on the hard landing question?
Yeah, China has to grow at a rate of approximately 7% to accommodate the new entrants into the workforce. Right now, you have Xi sort of conditioning expectations that growth could be slower. In the event that he does, at least he's conditioned the expectations publicly. But I would say anything below, I mean, China has to serve its debt. And right now, all the new credit that is being created in China, almost all of it, is being used to roll over existing credit. So I would say, a growth rate, I mean, China still has some advantages, in terms of the urbanization. The literacy rate is 91%. But I would say anything less than 3% would be a hard landing. So I attended a conference at CSIS a week or two ago on a similar topic, and one of the panelists said that China is currently in a recession. I completely disagree. If China was in a recession, you would see about 30,000 migrant workers going home, like you did in 2008, 2009, before the massive stimulus package. You had 30,000 30,000 were sacked and sent home. And you would see, watch this too, you would see real wages falling. They aren't. They're still going up. Maybe no longer at double-digit rates in the tier 1 cities, but they're still going up at a healthy pace. China is not in a recession yet.
So Bill, just to clarify, you would say that that hard landing is less than 3% because at least 3% is needed to either service or roll over the debt and keep employment at sort of politically acceptable levels. Is that
That's
your
correct.
summary? Yeah.
The key is social stability. If I can just interject real quickly, my learned colleague Dean Cheng has a very good analogy about the CCP, the Chinese Communist Party. He says basically it's a bicycle, with obviously with three wheels, and it's a tricycle, and each wheel, the first wheel represents used to represent income inequality. There should be equality in society in the early stages of the revolution. The second one was this. The second wheel was economic growth, providing a standard of living for your children that was higher than yours. The third one was nationalism. Well, in the first point, income inequality, that wheel has fallen off. We're no longer on a tricycle, a stable tricycle. We're on a bicycle. What if there is a hard landing? That's wheel number 2. And the only thing left is nationalism. So you're on a unicycle. That means you got to keep pedaling fast, and keep your balance. That's why I believe I'm afraid of a hard landing in China. You've lost that second wheel, and the only thing left to try to keep legitimacy in the CCP is nationalism, and that's scary.
There you go with the depression again. Peter, did you want to respond?
I think the first part of your question, sir, was what do they have to do to avoid? Yeah, if they do the right thing. Well, I think all they have to do is to do what they say they will do. The party central committee made a major statement in November of 2013, which was one of obviously Mr. Xi Jinping's showcase, where they took 60 decisions on where to go with the economy. If they just are seriously implementing those 60 decisions, I think we've got it made. So I don't have anything to add to that. In addition, they have to avoid making major mistakes. If they were to do, as Jim expressed some concern about, another major credit-based stimulus program, I would also side with the pessimists, because that's the last thing you want to do. But there is zero indication that that lies ahead. In fact, it has been specifically ruled out by the Prime Minister in his speech to the National People's Congress just last week. They recognize all these problems. You can't tell these people anything they don't know. So if they just do what they say they will do on SOE reform, on financial sector reform, on restructuring the local government debt, because that is a problem, and it can be, and I think will be restructured. The Budget Amendment Act of August last year creates the possibility of significant local government debt restructuring by creating the possibility, at least for the first time in China's history, of a money market, a bond market consisting of bonds issued by local level government, not guaranteed by Beijing. So if they do that, they create the opportunity for many local governments that are currently over-indebted to restructure, to stretch out maturities. There will, of course, be many local governments that will not be able to sell any bonds, either domestically or internationally. But Beijing, if things get tight, has bailout capacity, as I think even Bill admitted. The central government's debt situation is not terribly bad at all.
I could just interject for a quick second.
Sure.
Yeah, under the so-called hard landing scenario, the question is, would the party survive if the mandarins can transfer 2 to 3% of GDP from the state sector to the household sector? That's what it's been called rebalancing, and then you could maintain social stability in China, even though they've experienced a hard landing. And I'll just add one more thing too, and I'll keep my mouth shut. Remember that political scientists make fun of economists because we're lousy forecasters. Well, political scientists are lousy forecasters too.
Yeah, well, that's true.
No one saw the Iranian Revolution in 1979. No one saw the breakup of Eastern Europe in 1989. The CIA didn't know about the breakup of the Soviet Union in 1991. So anyone that says that this can't happen in China, I believe are naive.
You know, just really quickly, one other thing to note here is that social stability and party control are not necessarily the same thing. I mean, that's the party's perspective on social stability. It's not necessarily the same thing. And then the other point, on a hopeful note, just amplifying what Peter said about economists and officials in charge of economy in China knowing what's going on, knowing the right things to do, and not being able to tell them things they don't know. I think that very much is true. And so I think the one hopeful sign, one hopeful aspect of the environment, I think, is that there is an open debate among experts on economic issues generally. At least that's been my experience. You can go there and you can have real serious conversations about what's going on in the economy. It doesn't hurt their feelings to tell them that they may be headed toward a hard landing. They're very objective about that discussion, unlike any political or foreign policy issue where you can't really have a real discussion. So at least there's some talk. Now, whether the party absorbs that and they actually take the action that they need to is an entirely different question. Yeah.
Thank you very much. My name is Dong Huiyu with China Review News Agency of Hong Kong. And I have two questions. The first one, actually, I asked it yesterday in another location. It's about the article written by GW professor David Chamber. The title is The Chinese Crack Up is Coming. So I just would like to hear your thoughts about that. Mr. Wilson seems to be agree with that, right? And the second one is it was reported by Reuters that China will launch a new system called International Payment System in September or October. It is a very big step forward for China to internationalize the RMB. So are you concerned that this step is another step to challenge the dominance of the US dollar? Thank you.
Who wants to start there?
Yes. Was it three?
You want me
There's
to-
three
okay,
questions.
There's two questions, right?
Just two questions. Yes, I'm familiar with the article that you mentioned. I read it over the weekend. I thought he was a little bit too pessimistic. I would agree with Peter that, China still has 7% real economic growth. If the U.S. had half that, we'd be happy. And China has very strong resources to deal with some of these problems, and they also have very good people at the central bank that I've met, and they've been trying to avoid inflation, and they've avoided a huge credit spree after their stimulus package from the financial crisis. So I think that they want to avoid that disruption, and I think that they've restructured enterprises and had asset management companies in the past to take over debt and so forth, and they have some experience doing that. They have leveraged up, and they've leveraged up for the exact reasons that we heard Bill talk about. So there is a danger, I would admit, but I'm not as pessimistic as the author was. On the second issue, yes, this is a movement towards internationalizing the RMB. And they're doing a lot of other things, too, that are in the works for internationalization of the RMB. And I think that's a smart move. They have announced for some time they want to have more capital freedom, open capital markets, make the RMB fully convertible, and Hong Kong's been very cooperative in this effort. And now foreign countries are joining the process. So I think this is another indication of the internationalization of that currency and the movement towards a more open capital market, which are very constructive, important steps. China's not going to do anything dramatic. It's always been gradual, and it's worked fairly well for them since 1978. So I admit there's dangers in what's been going on, but I think they're fully aware of a lot of these dangers. Again, my big problem is that the crackdown on dissidents in China, on any kind of criticism, and now even on arguing for the rule of law and things like that, these are something that we should really worry about. When Tiananmen Square happened in 1989, one of the factors that played into that was the high inflation that was starting to occur in China. So people other than students took part in these demonstrations. So I think they're very aware of that in the leadership, and and they've cracked down on dissent even more because they have the apparatus to do it. But the information age, the technology is available for, hundreds of millions of people in China have computers and cell phones and everything else, and there's ways around the firewall. And this is a huge threat to the central planners. And that's why I'm optimistic. I think in the long run, the Chinese people want more freedom. And the leaders may be pushed in that direction. I don't know. If they aren't, as you said, if a crash could be horrendous in terms of, Rahm Emanuel says every good crisis brings an opportunity. Well, an opportunity for bigger government. So what we want is smaller government, not bigger government.
you. I'm Jennifer Lee. I'm with Hong Kong Phoenix TV. Thank you all for your insights. I think all of you all point out the several imminent or foreseeable challenges China is facing. I have a follow-up question of the Premier Lee's government reports that Professor Buckley already touched upon. If you happen to read or watch his remarks last week, he also mentioned a couple challenge China is facing, and he also mentioned a couple specific reform that China is going to do. I wonder, after his remarks, what's your takeaway, and then which part impressed you most? And after the remarks, are you feeling more optimistic or pessimistic about China's structural reforms? Thank you.
I think that's for you. Peter.
Would you mind? I may have missed part of it, but what is specifically the question?
So he mentioned the challenges and the specific reforms. If you think which one impressed you most, which reform you think is the most important, and are you feeling more confident or pessimistic after his remark? Do you think China can carry out these reforms?
I think the hardest questions are political. They're not technical economic questions, and I agree with the moderator that you have a very competent bunch of people in the central bank and the Ministry of Finance who know their problems very well. But I think the real challenges are to deal with the domestic opposition against reforms. China has become, since the beginning of these market reforms now more than 35 years ago, become a rather pluralistic society. I mean, you have all sorts of interest groups. They have their own K Street now. The lobbyists have become very important domestically in China. Many people working in the state sector, particularly state-owned enterprises that are not particularly efficient, have a cushy life. And they have enormous political power. They will resist significant SOE reform, even though Xi is pushing for that, as we know. He has cut the salaries and the benefits of all the SOE managers, which is an indication of the direction in which he wants to move, but it is not a decisive move. So I would say that the hardest reform questions are not the technical economic questions, they are the political questions. And you may have heard the name Fukuyama, who was a colleague of mine at SAIS until he went to Stanford a few years ago. He had a very good way of explaining the three factors necessary for sustained high growth, for sustained stability with growth: capable government, rule of law, and democratic accountability. Three factors. That's also in his latest book. Well, China has a capable government, but it has no rule of law, and it does not have genuine democratic accountability. And I think that goes to the heart of the political problem, because the party seems to be unwilling to recognize that ultimately it will have to subject itself to the rule of law. And from the way we understand things, that can't work in the end. That's why I think both Jim and Bill pointed out there's an incongruous situation politically. And how that will be resolved, if it will be resolved, and if so, when, I have no idea. But I think the hard questions are political.
Yeah, can I make just a brief comment on that? There was an interesting article in the Wall Street Journal the other day talking about Xi Jinping's new program that he calls the Four Comprehensives. Well, you know, Jiang Zemin and Deng Xiaoping and Mao Zedong and all these people had their own little things. So Xi Jinping wants to have this Four Comprehensives. And the Four Comprehensives that he lists are, you couldn't object to them. I mean, he calls for comprehensively build a moderately prosperous society, comprehensively deepen reform, comprehensively govern the nation according to law, and comprehensively be strict in governing the party. Well, governing by law is not what we mean by rule of law, okay? Rule of law, it's not a written law, it's a charter for freedom, and the courts act as a bulwark for freedom. That's not, I'm sure that's not what he has in mind. one Chinese specialist they asked to comment on this four comprehensives, said, quote, and this is a very profound statement, "It's the most comprehensive framework he's put forth." Well, it's four comprehensives, you know, it has to be a comprehensive framework. You know? So be careful, you know, what they say is different from what they do. It's sort of like you know, if I've got a twin brother, identical twin brother, he's a lawyer. I don't hold that against him. But you know, he's dealt with criminal law and so forth, and he said it was hard at first. He got out of it eventually. He went into intellectual property law, which is probably sort of criminal law. But these people would lie through their teeth, and he had our natural instinct is to sort of believe what other people tell us, and you can't do that. You have to look at what they're actually doing. And what they can do is highly constrained by the institutions they operate in, namely the communist ideology. And that's still throughout Chinese society. Not the people, but the so-called civil servants, if you want, the Communist Party members. So, you know, that's something to really be concerned about, I think.
If
Yeah,
you
yeah,
allow
sure.
me,
Yeah, go
to
ahead.
come back to the question raised by this gentleman from Hong Kong, because they are technical economic questions on the China International Payment System, CIPS, that was just announced a few days ago, and that will kick in by September. I think it's terribly important. It is part of the infrastructure that China is building to make the renminbi, its currency, more usable internationally, and that's clearly both an economic and a political objective. Right now, they are dependent on the SWIFT system, the Swiss-based SWIFT system, which is a dollar-based international payment system. If they can do it correctly, these are technically very difficult things, they will have it becomes much easier for them to promote the objective of renminbi internationalization. And almost unavoidably, because of China's economic size, the renminbi will become a competitor with the dollar as an international reserve currency. It may be 5 years away, 10 years away, but it's almost unavoidable if the system doesn't collapse in the meantime.
If I can make a 30-second comment, I'm actually finishing a paper on this exact topic, whether the RMB can become a reserve currency. You need three things. You have to be a large trading partner. China has that. China is the largest trading partner in the world. The largest exporter, the second largest importer. That's important. You have to have all three, by the way, otherwise you cannot become a global reserve currency. Your currency has to have a stable value, otherwise there's no confidence in the currency. The RMB has actually had a very, very stable value in terms of pegging it, a crawling peg with the US dollar. Third attribute it needs, which it does not have, is an open capital account. You will not become a global reserve currency until you open the capital account. And by the way, there's a belief that the U.S. dollar it's losing its global reserve status, which benefits us enormously globally. We have not. In fact, if you look at global reserve currencies, they've actually risen during the financial crisis, not fall. They've risen.
Sorry, does it mean that China need to have a more foreign reserve so that they have more resource to address any uncertainty in
They
the
don't.
open list
Yeah.
system?
Yeah, sorry to interrupt. They don't need more foreign reserves. They're at $4 trillion, earning a 0% or 2% rate of interest. What they need is before they open the capital account, they need to liberalize their financial sector, a massive liberalization of the financial sector. Otherwise, there's going to be capital flight.
We're threatening to run a little bit over, and I got a couple other questions I want to take up, but just very quickly, I think the part of the basis for the question is somewhat faulty, and it's not your fault, but I think you're just reflecting the way the debate is had around here. Is that I stated at the beginning something about how great it is to have economists talking about the Chinese economy. The problem is we have too many politicians that talk about Chinese economy in Washington and talk about economic issues generally. Okay, it's not the same sort of thing. You can't think about it, I think, in political terms and geopolitical terms. The Chinese currency competing with the U.S. currency is not a game. It's not a football game. One currency wins, one's going to lose. They win. More people are using the RMB. We lost this week, or I mean, what's wrong with the Chinese economy becoming an international reserve currency? I think it'd be a good thing. It'd probably help us get our fiscal house in order, because we'd lose that privilege of being the sole reserve currency, basically, and be able to run up debt. So I don't see it. I don't see it as a competition. And I think often we get into a mess when we try to turn these economic issues into geopolitical issues. And the reason why we do that is because you have too many geopoliticians in Washington trying to interpret economic developments.
I'm Takamoto Suzuki of CSIS, and I originally from Marubeni Corporation. That is a multinational investment company. My company, Marubeni, invests in China more than 500 billion yuan, and revenue in China more than 2 trillion yuan every year. So for us, China market is critically important. And so I want to ask Dr. Wilson, for multinational companies, what to do in middle term in China? As you say, if Chinese economy going to face severe recession or Great Depression, we multinational companies cannot retreat our assets from China. How to live together with China? Please give me an answer.
Okay, let me, Bill, let me just take a couple questions and then we'll wrap up, okay? So let me take a couple more and then you can address that one in the wrap up.
Okay.
Vijay, right there.
I'm Vijay Nilekani. My question is a black swan event. The Great Recession, no economist or politician or Federal Reserve guy or a CEO of a big bank forecast. Every major thing that has happened, really turbulent stuff, there's been no real ability to forecast it. And I'm wondering whether there's any black swan event embedded in the Chinese system that is beyond what we are thinking about. I mean, the very fact that President Xi is consolidating power into a one-man rule almost, he is less consensus orientated than his predecessors. The fact that the growth rate is there was a compact between the people and the Communist Party that as long as there's a good growth rate and the economic situation is improving, they'll overlook the other things, and all these things could turn topsy-turvy. So just your thoughts on that.
Okay, yeah, right here.
Thank you. My name is Hermes Levy from OWS. I have two questions, one especially for Bill. It's when you talked about the hard landing is up to the state. What do you mean by that? Can you comment on it?
The long term, you said?
No, the hard landing
The hard landing.
is up to the state. And the second question is for all of you. What I want to know how much the Chinese invest in the military sector and what can we learn about that? Thank you.
Great, thank you. Right here.
Yang Ming from VOA. Today we have some news figures came out from the Chinese government. One is the industrial production, the other is fixed asset investment, the other retail sales. These all three slowed down by over 1.1 percentage point. So would this worry you more, Professor Baudelaire? And would this reinforce your hard landing, Dr. Wilson? And also, the Chinese government has said the GDP growth for this year is around 7 point. So given the economic situation for the first 2 months of this year, do you think that's the appropriate target, or would you rather forecast is lower, or by how much? And the last one is for Dr. Wilson. So you forecasted the hard landing should come sooner than later. How soon? Do you have a timeline? Thank you.
Okay. All right, so everyone takes 2 minutes. We can get done.
Why don't we start with Bill? Since,
Okay, Bill, why don't you've got a couple specific directed to you. One is what to do with the middle term. Is that midterm about, especially as regards to impact on investments in the country? What can the Chinese do to reassure companies invested there? And then the last questions from VOA, I think, also directed at you.
Yeah, one distinct, during my 3 years there, the foreign multinationals complained that it was getting much harder to do business in Beijing. I knew a guy who came from big multinational corporations, even small and medium enterprises. In my building, an Australian with his Chinese wife opened a Western-style restaurant, and when they didn't pay extortion, there was a lock on the door. Read the what's the white page book, the doing business and
World Bank report, doing business. I don't know.
Yeah, I forget it. But both the European publications and the American publications of the ease of doing business in China has dropped precipitously the last few years. Again, there's no protection of property rights. There's no rule of law, and I can get back to. I haven't said much about President Xi. I believe the CCP is scared. I believe they're scared. It's an antiquated party. It's the second largest party in power in world history after paradoxically North Korea, and that is the premise. The corruption campaign has two purposes. One is to rid of his enemies and consolidate power, but people are overlooking the second reason. He wants to increase the legitimacy and power of the CCP. I believe they're paranoid. I believe it's an antiquated body.
Okay, great. Peter. Black
Two
swans.
minutes?
How about take the black swans?
Okay.
Or anything else you want. Just
How to
narrow
live
it
with
down for
China?
you.
I think if Japan can do it, the rest of the world can. And that's the big challenge for Japan and for China, to be cooperative neighbors, which is not the case at the present time. Black swans, by definition, cannot be predicted, right? So I don't know. Could be massive earthquake. It could be an aggravation of the political conflict and military conflict between Japan and China. That could be a big black swan. It could be a collapse of the real estate markets, which I think is preventable, but still could happen. So black swans, I have to stay out of. Yes, I am concerned about the economic statistics for January and February. They point to continuing economic slowdown. If they are able to grow at 7% this year, I think that will be a great achievement. I personally don't expect it. We're probably below 7 right now. I was surprised that in the 3 speeches for the NPC last week, the numbers about 7% was in fact mentioned. I had hoped they would stay away from a specific growth target, because it can be a trap, particularly in a troubling situation where they are now. Shanghai municipal government, in its plan, avoided saying what target they set, which is the right way to go, even for China, I think. Whether you need 7% to maintain social stability, full employment, I don't know. The larger the share of the service sector is in the economy, the lower the growth rate required to maintain full employment, because you need
That's right.
Per dollar of value added, you get a lot more employment out of services than most other sectors in the economy. If I had been forced to recommend a growth target, I would have said 6%, quite frankly, because then there is at least a chance that you may reach it and perhaps even exceed it. The reason why the 7% was put in, I was told by a friend in Beijing, is because the Central Committee 2 years ago, a year and a half ago, in November 2013, had announced that they wanted to double the economy by 2023. That's 10 years from then. If you want to double something in 10 years, you need this compounded growth rate, 7% per year. That's the reason they put it in.
I mean, fair to say it's a
Nobody wants
politically-
to second guess the
It's a politically determined number. It's not an economically determined number.
Yeah,
Right.
sure. Yeah. Well, I think there were several other questions, but the investment in the military, I can't comment on. There are other people who know much more about it, including Jim, than I do. The total military budget has continued to rise very sharply. They're apparently now building a second aircraft carrier. Well, the first one they didn't build themselves, they refurbished. The total military budget, the official budget number is still only about less than a quarter of the US number, right?
Okay, thank you.
Yeah, just a couple brief comments. This whole idea that the government can somehow give a growth rate to the economy seems absurd to me. The economy is a huge, complex system, and if the Communist Party leaders are going to say, okay, we want 7% growth, they can engineer that, but that's an engineered economy. Again, what matters to me is the range of choice is open to people, which means how is the market going to advance versus the plan, if you want. And that's a political question to a large extent. Zhang Wei-Ying, in his article in the Cato Journal, talks about what you need is both good ideas and strong leaders that will institute those ideas. And he doesn't know whether the new leaders in China will be, able to do that. It's highly uncertain. That's where the problem comes. Also, a lot of people are starting to predict 6.8%. Well, 6.8%, 7%. I mean, their growth target last year was 7.5%, and they came in at 7.4%. I mean, it's almost a joke, like economists can go 3 or 4 places to the right of the decimal, The VAR models, the value at risk models that were part of the problems with our financial crisis, China is imitating the U.S. to a large extent now, some of the stupid things we did. I mean, you look at their housing markets is over-leveraged. You look at the risks that they're taking on different investments. And that's why those concerns that Bill brought up are legitimate. The other thing about China, it just doesn't depend upon China's growth. It depends upon how the U.S. does and Europe. The U.S. is starting to achieve some growth, but it's still very sluggish. And maybe the quantitative easing in Europe will help stimulate growth in the short run, but I'm not a big believer in that. I think real growth requires real changes, structural changes, not just throwing money at the problem. So there's a lot of uncertainty, and it will come down again to how good policies are, which comes down to politics, really. Because when push comes to shove, it's usually the politicians that come out, at least in the short run. I mean, look what Nixon did back in the 70s with wage price controls when he was being advised by people from the University of Chicago. So the politics will come first, I think. So I wish China good luck, because if China doesn't survive as a ultimately free society, the world's going to be a lot less desirable place to live in.
I liked ending it there. Good way to end it. But thank you very much. It was a terrific conversation from a variety of perspectives. I think we got a good look at this issue in the short amount of time we had, which I extended just a little bit. Sorry for that. But thank you all for coming.